and welcome to this very special episode on ET Now. I'm Nayanthara Rai, working from home. My guest today is Rajan Anandan, the Managing Director of Sequoia Capital. Rajan, it's always a pleasure talking to you. Thanks so much for joining us here. We're talking towards the end of 2020, a year that Sequoia described as the with coronavirus being the black swan event. As we go into 2021, it's with a lot of hope, a lot of optimism around vaccinations, that the post-corona world is going to perhaps be here in 2021. For the startup ecosystem, the silver lining is they had no choice. They had to focus on unit economics. They had to burn the fat. They had to figure out their road towards profitability, take decisions they didn't want to take, and perhaps they had been delaying. As we go into 2021, what, according to you, are going to be the big themes?
Yeah, so firstly, great to be back with you, Nayanthara, and hope everyone is safe. Obviously, we continue to be in a very challenging environment. Look, as we go into 2021, as you say, I think the Indian startup ecosystem, despite a very, very challenging 3 months, which was April, May, and June, has recovered. Large parts of the startup ecosystem have recovered. And as you said, I think we are exiting the year with much, much stronger underlying unit economics. And thanks to faster adoption of digital and technology more broadly, but digital specifically among both consumers as well as businesses, dramatically faster adoption, right? So as we go into next year, I think what we should expect is accelerated growth across many sectors. Like, for instance, you look at sectors like e-commerce. That's number one, I think, on both users as well as on monetization. And secondly, just continued focus on improving underlying unit economics. So I think we'll actually now begin to see two things that have been quite elusive in the Indian startup ecosystem. One is revenues, right, which have been quite elusive. We've had plenty of user growth. We've actually been quite strong on investments. But absolute revenue growth at scale has been quite elusive. I think what we've started really seeing, we started seeing this about 2 years ago, but this year, surprisingly, we actually saw acceleration of revenue. And I think next year we're going to see continued acceleration of revenue growth. And, companies that are going to get to significant scale on revenue. And secondly, I think you're going to see continued improvement on the underlying unit economics. So in many ways, it's sort of ironic to say this while we're still in the middle of COVID as we exit 2020, but 2021, our startup ecosystem is going to be much, much healthier than we've ever been across revenue, across user growth, and also across underlying unit economics and profitability.
And as we talk about healthier unit economics, revenue-based growing, more users coming on, what we've also seen in the last couple of months is very strong statements from the larger startups, at least, about how they want to go in for an IPO. IPO is always, of course, considered to be the best exit for investors. But do you think 2021 could be that defining moment for the startup ecosystem? The large ones are at least coming out with positive commentary. We don't know where they're going to list. Their public statements stop short of that.
Yeah, look, I do think 2021, we will embark on a new era for India's startup ecosystem. New era in terms of an era that will be defined by scaled revenue companies that have much better underlying unit economics. And second is also IPOs, right? Look, I do think 2021 will mark as an ecosystem, as an industry, the first set of and it's not going to be one or two, right? Every year we've had one or two IPOs. I think, IndiaMart went public, for instance. I think that was last big Indian tech IPO. But I think we'll see more than one or two. I think we'll start seeing quite a number of Indian companies go public. I think many of them will actually go public on the Indian exchange. But as you and I have spoken about, Nayanthara, and we covered this topic at scale, the single biggest unlock, for our ecosystem at this stage is the ability of Indian startups to directly list on international exchanges, right? So the government, as you know, has been very progressive on this front, I think, and they're working through the final details of this change. And we are hopeful that over the next couple of months, we will see this finally come into effect. And once it comes into effect, you'll absolutely see Indian companies go public on international exchanges. So then we'll actually have have this sort of ability for an Indian company to decide whether they want to go public on the Indian exchanges. And I do think we're going to see several companies actually in India go public, startups go public on the Indian exchanges next year. But also we'll start seeing companies go public on international exchanges and most likely on exchanges like NASDAQ. So we will, a new era is going to be upon us in 2021 across many dimensions.
And as far as this space goes, Rajan, because we're being told that there seems to be a lot of exuberance for the private space. How HNIs have now started looking at these internet consumer companies. They understand that these are the ones that are going to see hyper growth and not those perhaps the traditional old economy stocks. What would your advice be? Should there be a mandatory listing in India, or should it really be up to the startup, to the founder? Do they want to go to NASDAQ or to Singapore, Hong Kong, or to list back home in India? What would be beneficial for the ecosystem and which will of course include the investor community?
Look, it's very important, Nayanthara, and I think as an ecosystem, we've sort of been quite vocal about this, that it should be really the option of the startup, whether they go public in India or whether they directly list outside of India. Keep in mind that the companies that list outside of India, Indian companies, right, that list outside of India are doing it for a reason, right? They're doing it because they have a certain growth and profit trajectory that would make it viable for them to go public, for that particular company to go public outside of India, right? Let's just say for a minute that it's NASDAQ. And there's a reason that company is not going to go public in India is because it cannot. So as a result, if you make the international direct listing, if you make a mandatory dual listing, we do believe that would make that policy not effective, right? And I think we've been quite clear about that. So it really should be up to the startup whether they want to list in India or whether they want to list directly outside of India.
Absolutely, and if their hands are tied, then we'll again see those a lot of these startups perhaps externalizing, going overseas if they choose to list overseas, and then it's not good news for the Indian investor community that may want to participate. But while I'm on this subject, Rajan, I want to get your views on this. Sanjeev Bikhchandani of InfoEdge India recently spoke about how we are seeing the likes of Y Combinators or others getting founders and startups to flip, to change their domicile. His point is he's not against foreign investors, but this is not good for the India growth story. It's not good for India to lose its IP, that there's just maybe not enough domestic capital to support this burgeoning ecosystem. I would love to get your views on this.
Yeah, so Nayanthara, look, as a firm, as Sequoia Capital India, we do not require our founders, right? Any of our founders to flip their companies. In fact, if you look at the Sequoia Capital India portfolio, we're very fortunate to have several hundred companies in our portfolio in India, and many of the marquee names in the Indian startup ecosystem, right? You look at a company like a Byju's, or a company like an Oyo, or a company like Zomato, or a company like Unacademy. They're all incorporated in India. They're domiciled in India, right? So in our portfolio, we are very, very clear, right? We have to do what's right for the founders, and we have to do what's right for the company. So as Sequoia Capital, we don't really require our companies to flip.
I take your point, but do you think Sanjeev Bikhchandani, the man behind Naukri.com, the only listed entity also you have in the Indian stock markets through which you can invest in Indian startups like Zomato, etc. Do you agree with this point when it comes to, are we seeing a case of new age digital colonization, the new age East India Company, or do you think that maybe is exaggerated, or do you think there is merit in the argument?
So look. First of all, I think all of us admire, respect Sanjeev. He's a dear friend. Look, I do think, as a country, what we should do is create a regulatory framework and make business so easy to do, and creating, scaling startups so easy to do that. So we create truly world-class companies, right? And the way sort of I look at it, Nayanthara, is let's look at the reasons why, companies, some companies that do flip, why do they flip, right? And let's look at those reasons and let's systematically try to address those reasons that they do flip. Because if you actually address those, then I think the companies that do incorporate outside will actually incorporate in India. So I think Sanjeev has raised a very, very relevant point. And I think you'll hear from him. But by the way, he's gone out and said that he's not against foreign capital, etc., which is absolutely not. And I think he's also said that what we should do now collectively as an ecosystem and working as startup ecosystem working with the government, let's try to address the underlying reasons why some companies, and by the way, it is some companies, right, actually do end up flipping.
Fair point. Let's move on from this topic now. Rajan, you and I have often discussed it. Everyone's talking about it. How in 2020 we've seen consumer behavior change. They say it takes sometimes as little as 3 weeks for a new behavior to become a habit. I want to ask you that we're all familiar with the changes in consumer behavior, but can you give me an insight into how investor behavior has changed? Has there been a change?
Look, I think investors look basically as early stage investors, right? So let's look at Sequoia Capital India as a firm. We invest in, we partner with early stage founders, right? From idea to growth, but technology companies sort of idea to growth. At the end of the day, we look for extraordinary founders who are mission driven, who want to build truly enduring companies, right? And then depending on the stage, we look for different things, right? Our venture team will look for companies that have early signs of product market fit. Our growth team will look for companies that have product market fit, have very established teams that have very strong underlying unit economics and extraordinary growth, right? So at every stage, we look for different things. So I would say, look, Nayantara, what we look for has not changed as a firm, right? Fundamentally, we're looking for the same set of things. Extraordinary founders, who are looking to who are building truly, companies that we think are going to be truly enduring. But if you look at what's happened, I would say post-COVID is there's been a very significant flight to quality, especially among growth stage investors, right? So a company, let's say a year ago, maybe that didn't have great unit economics, they would have been able to raise a multi-$100 million round, some cases a $500 million round. But I think today in India, if your unit economics are weak, I think it's quite difficult to actually raise a meaningful large round. So I would say that's probably the one thing that has changed. Also, look, we've seen as you said, we've seen a dramatic acceleration of consumer adoption of digital technologies, business adoption of digital technologies, and as a result, Nayantara, what we've seen is an unabated growth of new Indians starting up, right? So we've been, at the early stages, if you look at Surge, where I spend most of my time, which is Sequoia Capital India's seed stage program, or our venture team, we're all busier than we've ever been. We're just meeting more and more companies that every month goes by. So I'd say that's really, so fundamentally it hasn't changed, but I would say, it's what you started off with, right? Which is, especially if you're a more evolved, slightly later stage company, it is important that your unit economics are viable.
And what are you seeing at the moment among the quality startups? Is there a hunger to go global, for example? Because this is also a year where every startup has had to conserve cash, increase the runway, focus on unit economics, maybe pivot, nix plans that they probably have had. And I ask you this, Rajan, because your advice has always been, yes, you need the Me Too models, but come out with models that are relevant for India and the world.
Yeah, look, so I think, Nayantara, what's very interesting about 2020 is, despite the fact that we've had a crisis at a scale we haven't seen in 100 years, India has created 10 new unicorns in 2020, right? We still have 2 more weeks to go, right? So if you look at the last 4 unicorns, Razorpay, Unacademy, Cars24, and Zenote, which I think was announced this week, right? Those 4 may actually take the number of new Indian unicorns, 10 new unicorns created this year. What's very interesting, Nayantara, was 2019 was the peak before 2020, right? We had 9 new unicorns. So actually with these 10 new unicorns, India now has 35 unicorns, which is extraordinary, because if you go back to 2015, we had, you could count on one hand the number of unicorns that we had. So I think despite what has happened, what we are seeing is an acceleration, and this goes back to consumer adoption, right? What's happening with COVID? What happened to consumer adoption? What happened to business adoption of technology? So clearly, if you had asked me during the last week of March, or I can't remember, Nayantara, when we spoke during lockdown, maybe it was probably second week of April, would in the year 2020, sitting in April, would India have 10 new unicorns? I would have probably said, it's kind of hard to imagine, right? But here we are. We've created 10 new unicorns as an ecosystem. So what that, and also, by the way, if you look at Zenoto, which is a SaaS company, right? Zenoto is the 6th Indian SaaS unicorn. 2.5 years ago, Nayantara, India had 0 SaaS unicorns, right? Software as a service companies, product companies. So Freshworks was the first Indian SaaS unicorn. Dhruva was the second Indian SaaS unicorns. And at Sequoia, we were very fortunate to be partners with both of those companies. And now here we are, we have 6 SaaS unicorns. So India is unique. And I've said this, you and I have spoken about this a lot, right? India is unique in that you can have very large businesses, startups built just focusing on the India market, but also you can have sort of global from day zero startups that are actually built from India. And the other thing we are now seeing is, these sort of what I call India plus businesses, right? So you have India-centric startups, you have, global from day zero startups, so a company like a Freshworks or a Dhruva, or in the current search portfolio. By the way, we have a large number of our 17 companies are actually global from day zero companies, either from India or from Southeast Asia. But now what we are seeing is this new category of companies that are emerging, which I'm calling India plus, right? So they focus on India, Southeast Asia, and GCC, especially in sort of SaaS companies, right? So a company like Shipsy, which is in our in our recent cohort of search, and this is a logistics-focused SaaS company that is focused on India, GCC, and Southeast Asia. And what a lot of people actually don't realize, Nayantara, is if you look at the combined GDP of India, Southeast Asia, and GCC, the 6 countries of GCC, you're looking at a combined GDP of $8 trillion. Right? That's a very large regional economic block, right? And if you're a startup that can actually win in this, and by the way, all these countries are within a 3 to 4 hour flight from Delhi or from Bangalore, that matter, right? So you can imagine the kind of businesses that you can build. So long answer to your question, but that's sort of how I see it.
And is that what you're encouraging the entrepreneurs to do, whether they're in your cohort or the ones that you mentor or that you meet, that look at this India plus model? Is that the way to go?
No, so I think, look, what we encourage our founders to do, and we work with them very, very closely, Nayantara, is to do a couple of things, right? One, be mission focused, right? They should be, you have missionary founders and you have mercenary founders. And it's very, very important that founders are driven by a mission, right? Whatever that mission is, right? I think that's the first thing. So we encourage them to think deeply, because whatever you embark on as a startup founder, this is going to be your life's work, right? If you're going to be successful, it's going to take 10, 15, 20, 30 years, right? You can take Byju's. This is Byju's life's work, right? This is going to be Dipendra at Zomato's life's work. You can go through Girish's life's work to build Freshworks. So one, I think it's very, very important to be missionary and take a very, very long horizon to what you're trying to do, right? I think the second thing is, look, it's very important to focus on a specific user, deeply understand the problem that you're trying to solve for that user, and then build a product that is going to solve that problem at a scale, at a level that nobody else has, right? So we talk, you hear a lot about product market fit, but we really encourage founders to be very, very focused, right? So what that means, by the way, is, look, let's take a SaaS company, right? Solving a small business, solving for a very specific small business problem, right? In India, so let's take Pagabook, which is in our current SaaS cohort, right? They're building a HRMS solution for very small businesses in India. Now, solving for that problem is very, very different to, let's say, what a Shipsy is doing, right? Shipsy is trying to help large enterprises and mid-sized enterprises in India and Southeast Asia on specific issues that they have with logistics, like visibility and so on and so forth. So I think the second thing we really try to encourage our founders to do, especially at the early stages, is be very, very clear. Who's your customer? What is the problem you're trying to solve? And can you solve it 10x better than the next best solution that they have today? So that's sort of the second thing, right? The third thing we encourage our founders to do is hire the best talent. Right? One of the reasons at Surge, for instance, we give our Surge seed stage companies $1 to $2 million is because if you're only raising, let's say, $100,000 or $200,000 in a seed round, it's very likely that you can't afford to hire truly world-class talent into your company. Whereas if you have $1 or $2 million, you can actually go out and hire, the best engineers, right? No, you don't need lots of them because in the early stages, you need a few of them, right? You can hire a great product manager. You can hire a great, marketing leader, right? So that's, but this notion of hire the absolute best talent, because the first 10, the first 15 hires that you make in a company, that's going to make or break your company. Right? So that's sort of the third thing. And the fourth thing is, look, we encourage our founders to be very, very thoughtful about how they're going to drive growth, right? Deeply thinking about what are the growth channels that can really deliver the kind of scale that they need. And finally, whether or not they have a business model at the early days, I think thinking through that business model becomes very, very important. So in fact, tomorrow, we have the whole day on Surge with our newest cohort of founders. We have a whole day focused on building an economic engine, right? How do you build an economic engine? Not immediately, but over a period of time that can actually help you, build a viable business model that will generate not just revenues, but profits and over time cash flow. So those are the sort of things we talk to our founders about.
And can you give us an insight, because in 2020, what we've also seen is a lot of deal activity that has taken place. Look at Sequoia. You guys raised $1.35 billion in a new fund during COVID. I don't know how you guys did it. I'm sure it was done all virtually because flights had been shut out at that time. So, when you speak to the LPs and you speak to the GPs, can you give us an understanding of where India stands globally in repute in this ecosystem, what kind of innovation that we are leading with?
Yeah, so I think we've come a long way over the last decade, Nayantara, as you and I have spoken about, right? 10 years ago, India had a few thousand startups, 0 unicorns, less than $1 billion of venture capital, right? Today, we have 35 unicorns. We have over 40,000 startups. We don't know how much funding we would have raised for the full year, but it's going to be around $10 billion, right? So by the way, last year to this year, we saw more unicorns this year than we did see last year. But the total quantum of funding this year will be less than last year, primarily because of what happened in the April, May, June quarter, right? So we've come a long way, right? So 10x growth in capital, 0 to 35 unicorns, 40,000 startups, which is orders of magnitude more than what we have. But as I've said in the past, I do think we are still at the these are still early days of India's startup ecosystem, right? Because what we are now going to see is a decade where we will see accelerating innovation, new business models the world has never seen before. If you look at a company like a Khatabook, which was in our first Surge cohort, Nayantara, or Pagabook in this cohort, right? These are businesses the world has never seen before, right? They're truly uniquely Indian businesses, right? And we're seeing them in SaaS, by the way, right? I mean, it is one thing to see them in agri-tech and spaces that are, where you would expect them to see, right? Like EdTech, we have EdTech models the world's never seen before. So I think we're going to see uniquely Indian business models, number one. Number two, you're going to see revenues in startups of significant revenue scale. And that's very important, right? The way you create truly sustainable, enduring long-term companies is you have to build companies that have revenue, profit, and over time cash flow scale. So that's the second thing you're going to see. And third thing you're going to see is, look, I do think, a reference point we should have, Nayantara, is in the year 2019, China had over $30 billion of venture funding, for startups. India was at about 14.5 billion, right? So we were indexed to about 50% of China in 2019. This year, I think the Indian ecosystem will end up with about $10 billion of funding, roughly thereabouts. I'm talking about the total ecosystem, right? And so clearly, I think in 2021, we'll probably get back to 2019 levels, and then we'll build from there. So the next decade, we'll just see more innovation, faster acceleration, faster build out of companies. And obviously, to do all of that, we will see more capital coming into India.
There are always events which define the evolution of the ecosystem, right? So it started with the Me Too models. You had the Flipkarts of the world, but then you had innovation from, let's say, someone like a Nykaa who said, "I'm only going to do this for makeup, cosmetics, etc." You've had a UPI moment, which has completely changed the payment system. We are pioneers of that. The rest of the world is looking at India and saying, "Wow, look at UPI," whether it's a Satya Nadella or a Sundar Pichai. Going forward, what is the next big event?
Yeah, I think the next big idea is called India. You know, I think what we're seeing, Nayantara, is innovation across sectors. So yeah, it really is. It's called India. What I mean by that is across many segments, right? It's building for India. It's building for the world. I don't think it's isolated to any one thing, right? If you had asked me, 2016, yes, it was about payments. It was triggered by UPI. We could say 2018, maybe it was about EdTech. 2018, 19. But I think going forward, if you look at the next decade, I don't think it's going to be, focused only on one or two sectors. Nayantara, right? We've talked about this. Look, in EdTech, we're going to see, many, many large companies getting built out, right? In FinTech, we already have many large companies. We're going to see that number sort of grow very rapidly, right? SaaS, we have 6 SaaS unicorns. That number is going to triple, very, very quickly here. So I do think across many different sectors, we're going to see accelerated innovation. And I think that's very, very special, right? Where it's no longer about, only one or two sectors, right? See, what you want for a very healthy startup ecosystem, that is an ecosystem that is firing on many cylinders, right? Anytime you have only one or two cylinders, you're at risk, right? And now what we're seeing, Nayantara, is, as you know, like even in e-commerce, right, where you've had, let's say, Flipkart, you've had Amazon, now, as you said, Nykaa, you've had a few vertical players. Now you have a company like a Meesho, right, which is, sort of leading the wave, the social commerce wave, right, or companies like Bulbul and others, some of, which are really leading sort of the new wave. So in some of these established spaces, you're seeing sort of the birth of a new generation of companies. And then in other spaces, right, you're seeing sort of the first generation of bigger companies that are going to get built out.
Absolutely love that, Rajan. The next big idea is India. And, incidentally, ET Now's motto is also Rise with India. And it's great to celebrate the innovation and the entrepreneurial zeal that we have been seeing, which has been all through COVID-19 as well. Just look how resilient all of them really turned out to be. And with that, as I come to a close to this interview, Rajan, I want to get your advice to all the youngsters that are tuning in. They really look up to you. Many of them perhaps are fighting their parents, saying that, it's time of uncertainty, be safe, take a job. Some of them might be scared because, there is a problem with raising capital for the youngsters at the moment, but they have a dream, they have a vision. What's your advice to all of them that want to have a startup, whether it's family pressure, whether it's monetary pressure?
Yeah, look, I think firstly, keep in mind that entrepreneurship is not for everyone, right? It takes 10 to 15 years. It takes enormous amount of hard work. It takes an enormous amount of resilience to make it work, right? So I think you want to embark on it because you really want to solve a problem. You feel this incredibly deep desire to solve a specific problem, and you're ready to make this your life's work, right? And I think that's what a lot of people don't think through. You shouldn't do a startup because it's cool, or you shouldn't do a startup just to make a lot of money. You should do a startup because you're absolutely, incredibly, and unquestionably obsessed about solving a problem. And you should do it with a view that this is going to be your life's work. But if the answers to those are yes, then go for it. There's never been a better time to start up in India. There's never been a better time to start up in the world.
All you youngsters out there thinking about it, just remember, it looks easier than it is. We only talk about the successes. We don't talk enough about the failures, which we also must celebrate. Every startup sometimes has nearly 6 to 7 death-like situations. Rajan Anandan, it's always a pleasure talking to you. Thank you so much for joining us on ET Now. Wish you, the entire Sequoia Capital team and your family, a very happy New Year.
Great. Thank you very much, Nayantara, and Happy New Year to all of you.